Our next speaker and last one before lunch is, well, let me also make an announcement. The conference planners are asking that you indulge us for a little bit. We have to promote this event. So before lunch, we'd like to have a group picture. So before you shuttle off real quickly, we want to get a picture of everyone before we leave, and then we'll have lunch. Our last speaker before we get to that is Brother Asim Abdul Fattah. He's a graduate with an MA in economics from Troy University, where he has served as a graduate research and teaching assistant. Through his academic training, he developed research interests in Islamic finance, higher education, philanthropy, collective action, and political economy. Brother Abdul Fattah currently works in the technology industry and hopes to bring original ideas and research from those fields to build Islamic institutions that are beneficial and sustainable for the American Muslim community and for the Islamic Ummah at large. Please join me in welcoming Brother Abdul Fattah, doctor one day, inshallah.
Assalamu alaikum. I'm actually not a doctor. I dropped out of medical school, so I'm definitely not going to be a doctor. Thank you so much. Bismillah ar-Rahman ar-Rahim. I'm going to get right into it. Sorry, because there's no time. There's no question that Muslims in the United States need financial institutions and banking institutions that offer full-service banking that also reflect the Islamic doctrine on dealing in financial transactions. Surely Muslims today, they continue to participate in the mainstream finance as customers, as employees, even investors, with different levels of depth into the mainstream. But countless Muslims desire and would benefit from a financial institution that reflects bona fide Islamic financial doctrine, at least as a substitute, maybe not in full, but at least in part. Fortunately, there's enormous potential to do this before even hitting any regulatory roadblocks. There are many regulatory roadblocks for many Islamic finance institutions, but there's one that does not have any roadblocks. Today, I want to present to you the idea of the Federal Credit Union for Muslims. Excuse me. I want to present to you the idea of the Federal Credit Union for Muslims in a way that is desirable, sustainable, legitimate, scalable, and does not. That's a slide. Yeah. And legitimate and does not compromise the faith and values. And by the end of this presentation, I want to hopefully convince you that establishing a federal credit union is not just beneficial for finance, but it's a way to uplift the community and make it more empowered and more cooperative and closer to faith than it has ever been. So what is a credit union? McKillop and Wilson define a credit union as a self-help cooperative financial organization geared to attaining the economic and social goals of members and the wider local community. So it offers full-service banking that is federally insured up to $250,000, just like a bank, and it's nonprofit and it's tax exempt. So its business model is based on the concept of cooperation, ta'awun. It's democratically run, and members can nominate themselves to be in the board of directors, and they can vote on who becomes in the board of directors. And usually the board of directors and executives are volunteers. They are not paid, and they work within the community for the community. So there's many reasons why you would want to have an Islamic credit union. The first one is financial inclusion. Globally, 10% of adults in general do not have a bank account because of religious reasons, and other reasons too. It's not solely religious reasons, but 10%. In Morocco and Iraq, it's 24% and 19%. So are these Muslims excluded from the financial system? Well, yes, but also some of them are self-excluding. They're opting out because the current financial system does not align with their financial goals and religious values. Also, many Muslims participate in the financial system in regular banks, but they only participate in so much in the halal way. So they use their checking and savings account for direct deposits, wire transactions, ATM. All these things are offered by banks, but they're not necessarily exclusive to banks, and they also do not contradict Islamic religious values. So while they are included in the financial system, they're also opting out of other parts. So that's why the data is not complete. So for here in America, we have about 100% of households are financially included. It's approaching 100. It's not 100%, but it's approaching 100%. So for most Americans, the question is not, should I open my first bank account? No, we make way more decisions than that because of the expansion of the banking footprint, expansion of financial technology companies and other avenues of finance. So we make way more decisions than that. And let me just give you an example here. Climate First Bank is a federally chartered an insured bank that is geared towards the environmentally inclined customers. Every time you open an account with them, they donate $100 to environmental organizations. They also offer pride banking products for the pride community. And they also donate $100 every time you open an account with them. And this is just one example of how banks can be geared toward social and moral goals. So, to answer the question, why do Muslims need a credit union? Well, why not, right? But it's not just why not, it's because we must. Muslims, according to a study or a poll by the ISPU in 2022, they found that Muslims are more than twice as likely to face challenges working with banks than the general population. And this includes charitable organizations, this includes business accounts and personal accounts. And this has been a trend called banking while Muslims, where Muslims get their accounts closed down or they can't, do regular business transactions. So we must offer them an alternative. And there is demand for that alternative. There's different figures and different estimates, but there's about 4.5 million Muslims in America. According to the ISPU poll, 7 in 10 of those Muslims of all ages said that they view religion as very important to them. So what I'm not saying here is there's a lot of Muslims, so let's build something and they're going to rush to the credit union and they're going to use it. No. They say if you build it, they will come. No, that's not, we already know that's not true. It's been tried. What I am saying, though, is a credit union could be built and founded such that a significant number of Muslims will want to use it, and that way it will be successful. So the difference in the argument here is kind of subtle, but it's important that the burden, the onus of success of the credit union is not on the larger community or the people who are going to want to rush to it. It's on the founders and the people who actually build it to make it appealing and to make it in such a way that it is appealing to the Muslim consumer. And finally, on the demand issue, Muslims demand financial, we've already established this like in the previous talks, Muslims demand a banking system that aligns with their goals. And me personally, I want to not, every time I walk into a bank, I don't want to picture myself in the middle of a desert, very hungry, and all I can eat is pork. I don't want to eat, because then I can, but I don't want to do that. And I don't want to do that every single time I go into a bank or I'm trying to buy a home. I don't want the choices to be, should I buy a home and eat pork or rent for the rest of my life? I want to do both in a way that is Islamic. Finally, an Islamic banking system could empower the community. The most basic way is it empowers individuals, it empowers families because they can afford to buy a house, go to school, buy a car. If they have an emergency, they can have access to cash, all those things. But it also empowers the community because when people save together, invest together, donate their money to build an organization that is helpful for everyone, that does empower the community. It is inherently empowering to know that I'm putting my money and my effort in a way that is achieving my goals for my community, for my kids, for my family. It is inherently empowering. And moreover, because of how credit unions are set up, how they're transparent, and how the governance is in the hands of the members, it is empowering because the community can now say, well, we want this institution to be Sharia compliant, bona fide Islamic Sharia institution, and we're going to do that because we have the tools, we have the information, it's all transparent, And I'll show you an example of that later. It's all transparent, and we have a vote in how it goes. So that empowers the community to take on that responsibility and achieve their goal. So these were the reasons why we should have one, but there's also some obstacles that we would face. The first obstacle is like a conflict of interest, pun intended, where savers want the highest rate of return and borrowers want the lowest rate, the lowest interest fees. It's typically, right? But the thing is, in an Islamic, in a zero interest environment, first of all, you don't have that interest lever to kind of favor savers versus borrowers, but also savers don't get a rate of return. So why should they deposit their money? Well, there's two reasons. The first reason is if a Muslim decides, well, there's like a self-selection process. The Muslim who does decide to put their money in an institution that has zero interest, they already decided that they don't want interest. So that problem is solved in the first place. But then also, you can think of it as, well, I'm not paying interest today. I'm not receiving interest today, so I don't have to pay interest tomorrow when I go and take a loan, or when my child or my family member goes to get a loan tomorrow. So it's kind of you're building, your reward is you're building the system. The other big problem is optimizing supply and demand in a zero interest environment. You don't have that lever to basically, oh, like we need more savings. Okay, so let's increase the interest rate. We need to give more loans. Okay, decrease. You don't have that lever. So there's a few things that we could do, and this is probably one of the hardest parts about it, but there's a few things that we could do. First, the technical efficiency. The credit union has to have technical excellence. Most people don't choose a bank because it has the best app or the best website, but they will definitely stay away from a bank if it does not have these capabilities. The friction will cause deterrence. And it has to have a good product mix. So we know that we can't have like traditional credit cards with like an API and all that, but you can have charge cards, for example. You can have debit cards. You can have perhaps an app that helps you with financial planning, an app that lets you put your savings, see your savings and say, okay, well, these are my goals, these are my investment goals, and so on. All these things can attract savers, and to say, okay, well, I'm not going to put my money in XYZ bank, I'm going to put it here because I can get access to these services. The other thing is the credit union has to allocate its resources in a way that does not overextend its capacity. So it's a tough pill to swallow, but that means like not everyone who applies for a loan is going to get a loan, of course, because there's an infinite demand for zero interest loans. Everybody wants them, even non-Muslims. Like it's just a no-brainer, right? But there has to be a way to limit. So there's going to be credit checks. There's going to be the loans probably have to be secured in some way. There's probably going to have to be co-signers. But that is essential. It's going to be somewhat exclusive, but that exclusivity is a feature and it's not a bug to sustain the organization. Then pricing strategies. Well, credit unions are non-profit, and an Islamic credit union would have zero interest. So the pricing here refers to the services that the credit union offers. Every credit union offers real services that incur real costs, and these real costs have to be offset by real fees. So these fees can at least marginally be adjusted to optimize supply and demand for money. And then the hardest problem, really, and I struggled with this a lot when I was writing the paper. And by the way, the paper includes so much more than this. Please read it if you have time. But I struggled a lot with this because supply and demand happen over time. Demand usually, when you get a loan, you usually want to pay over 3 years or 5 years, and if it's a home, it's like 30 years. But supply, like when you put money in a savings account, you want to have access to that money 24/7. And you might, just go and, if you want to buy a car, for example, you want to go and take like 20, 30, 50,000 out of your bank account to pay cash for a car. Well, that 50,000 was a loan for someone who was going to pay it in 3 years. So how do you optimize over time? There's a few things that you could do. And again, this is one of the areas where someone who's more of an expert on banking can help me with this. But there's a few things that you could do. On the demand side, the loans have to be smaller. They have to be for shorter periods of time, and that is doable because there's no interest component, so the monthly payment is smaller than what a conventional loan would be. So comparatively, you can get the same loan for shorter time with the same payment that you would get. So all the programmatic Muslims will be like, okay, I'm getting the same payment, so I'm fine. Because most people look at the monthly payment, they don't look at the final amount anyway. The other thing is like loans can be made in tranches. So if you need a $100,000 loan, you can get 25, 25, 25, 25 over time. That's a little risky for the borrower, but it could be done. On the supply side, you need to entice people to save more with you. So one way that could be done is through a loyalty program where the more you save over more time, you have access to more loans, or you have access to more, for example, financial planning. That's a service that the bank or the credit union can offer free of charge or at a discounted rate for people who save more or save for longer periods of time. They become like the gold membership gets you like a tax planner to help you with your taxes, for example. And that way you are incentivized to keep your money there more, or any sort of loyalty program. And finally, the biggest obstacle for any community project is the collective action problems. The two main ones are the free rider problem and high transaction. So the free rider problem is like every person saying, okay, I know I want this, I know I want this for my community, but I'll wait for the next person to do it, and once they do it, I'm going to enjoy it. And then everybody says that, so nothing gets done, because everybody wants to free ride. That's just rational thinking. The other thing is high transactions cost. The bigger your community gets, the bigger your group gets, the higher the transactions cost, because it's harder to communicate with everybody, and it's harder to reach consensus. If it's a small group, you only need to convince 3 people to vote for your idea. But if you have 70 people, it becomes much harder to reach consensus and reach an agreement on what you should do. So it's higher transactions cost. And I don't want to focus too much on these two, but I want to focus on something. I borrow this from the diffusion of innovation model. I think it's by Everett Rogers. And this comes from like a personal experience. The first time I heard about this credit union idea, and I was like, oh, this is the best thing ever. So I went and go talk to people about it and say, oh, you need to do this. And a lot of people did not understand what I was saying or did not feel the same passion that I felt. And that was kind of discouraging, but I'm usually more excited about these things than others because I'm a nerd. But when you look at the diffusion of innovation model, the first group of people that want to use any new product, anything that is new, it's usually 2.5%. These are the innovators. These are people who don't care that your website doesn't work very well or your app is a bit janky, or that you're not gonna be able to have you don't have 70,000 ATMs across the nation. You only have 3 in 2 cities, but they're still gonna be okay with that because they believe in they're passionate about it, they believe in it, and they want to advance it. Then you have the early adopters. These are the people who also believe in the idea. They just, they're not like the innovators. They had a little bit of skepticism. And these usually are community leaders, and they're usually people who have influence, and you really need the early adopters. Then you have the early majority, the late majority, and the laggards. I'm sure the laggards will show up for zero interest loans, but I don't know if they'll show up, for anything else. But you still have to focus your marketing and outreach strategies based on this, because you don't want to be focusing on the late majority when you're still in the innovation stage. That would be very frustrating and very costly. The last thing I want to talk about is the one-to-many versus many-to-many. I don't have a definitive answer for this because this has never been done before, so there's no way to know. But basically, should we have just one credit union for Muslims for all of America? Or maybe 2, say East Coast, West Coast? Or should we have 15 credit unions for all of America, maybe one in every, for every 2-3 states or something like that? There's pros and cons for both. And in the paper, I go in depth. For the sake of time, I'm not going to go into it. But this is something that someone who's establishing a credit union would have to really think about. The last thing I wanted to share is about Ma'oun Federal Credit Union. This is not a case study, it's just an example. I'm not affiliated with Ma'oun. I do have a membership with them, but I'm not affiliated with their program, with their board of directors. But I wanted to share this because this is not a fantasy. This is not some dream. It's a reality. It's already been done. Ma'un is a fully federal chartered credit union. It's already in operation. They have about 192 members, about $1 million in deposits, and 750,000 in loans. They're cash flow positive, which means that they're not relying on donations to be sustainable. They have cash flow that comes from fees. And these fees, by the way, they are not interest. They're not interest in according to the IRS standards. Like, you can't deduct it on your IRS because it's not interest. It's not interest in any way, shape, or form. It's not like a change the nomenclature kind of deal. It's more akin to like an application fee than anything else. They use a proprietary model on how to like calculate these fees, but they're based on their operational expenses. They're not pegged to the market. They have no, like, if the interest rate tomorrow becomes like 20%, their operational fees are still going to be the exact same. And it's 100% interest-free. And how do I know it's 100% interest-free? Because I saw their balance sheets, even though I'm not affiliated with them, but their balance sheets are available on ncua.gov. Every single credit union in America, there's like 3,000 credit unions in America. All their balance sheets are online. Everyone can see them. So every line item that says interest in it, for Ma'un it was 0. And you can verify that. And that's amazing, right? I think that's pretty incredible. They don't even have, like, when they take, like, their deposits, usually credit unions will put their deposits in another bank so they can earn interest, like, in the interim. They don't do that either. So it's pretty incredible. It's here. I think it's something that should be supported. I think it's something that we should maybe copy. It doesn't have to be like everybody has to go to Ma'un. You can, maybe someone else would have a better way to do it and they will do it. But I think it's pretty incredible. The last thing I want to leave you with is just kind of a realization that I came to when I was writing this paper, that the prohibition of riba is not a discount on interest. It's a powerful and wise guidance to build sustainable, fair, and efficient financial system for everyone. The trust, cooperation, coordination, vision, knowledge, effort, sacrifice, commitment, and persistence needed to establish a credit union, a successful credit union, is sure to elevate a community. And the credit union is nothing, it's just a keystone in a pursuit of decreasing the cost of piety for Muslims in America. It's very expensive to be pious in America right now, and this could be one way to decrease that cost of piety. Thank you very much.